are going to go on and talk a little bit about real estate and how you might be able to actually profit from the next fall, if it's coming. We have our good friend Brian Watson on. Brian, are you here?
I am.
Hey, thanks so much for joining us today.
Absolutely. Thanks for having me on your show.
For sure. Let me give a quick background for you before we get started. So for everybody else out there, Brian Watson is the founder and CEO of North Star Commercial Partners, which is a privately held commercial real estate investment company he founded in 2000. That's kind of why we invited him on. But in addition to that, he's really dedicated also to empowering individuals and the human spirit. He has a lot of additional work outside of real estate. He is founder and CEO of a nonprofit called Opportunity Coalition, where he provides resources and connections to launch people to success in today's economy. He also started the Education Opportunity Fund, which is a $100 million fund designed to purchase facilities for charter schools, which frees up limited budgets and administrative energy so they can focus on education for the kids. He also serves as the class president of the leadership program of the Rockies this year, class of 2015, which we love, of course, because Kim and I were class of 2012 LPR.
Best class ever.
Best class ever, we got to say ourselves.
I was wondering how long that would take.
So anyway, so thank you so much for joining us today, Brian. We really appreciate it, and we appreciate it for all the work that you're doing out there to help people as well.
Well, I appreciate everything you do on your show, so I'm honored to be with you today.
Thank you. When we had the conversation a couple weeks ago, talking to people about the subprime crisis and really how the government had been forcing lenders to lower their standards on the loans that they were giving, and how that led to the financial crash of 2008. And some friends of ours called us after and said, okay, great. You always say that you're about solutions on your show. So is there a solution if we really think it's about to happen again because they've started, lowering those lending standards again? If we think it's going to happen, what can we do? So we wanted to invite you on to talk about that. So do you mind first just telling us, what you think and your experience in the real estate world, what really caused the 2008 crash, and if you think it's possible it might happen again?
Well, absolutely. Real estate, we buy and sell real estate every day at North Star Commercial Partners, and it goes up and it goes down. We have to keep in mind that 2008 was the worst recession since the Great Depression, the worst economy in over 80 years. And it was predominantly caused by the government, just like you're saying, forcing lenders to give loans to everybody. And it really caused what is called the subprime, which is lower than credit type loans for individuals. And sadly, that was part of the reason for the crash. Owning a home is something that is a privilege that people who can afford them and to work hard and to make their payments on time, etc., that is all part of the credit quality behind those loans. And so unfortunately, when the government forced lenders to give more and more, then unfortunately that's what caused that crash. But I would say that lenders have actually gone almost the opposite way now, where they've become much more stringent on how they're giving loans and who they're giving loans to.
Brian, it's Kim here, though. My understanding is that there still is some relaxation of standards for, quote-unquote, the disadvantaged borrower. Have you seen that, or are you familiar with that?
There are government programs for that. And again, home ownership is a wonderful thing. You want to encourage that in society. It creates stability. It creates opportunity for people to have an investment. And for some people, it may be the only investment they ever have. So we want to encourage that where we can. The question is, how far do you get out above that where that can continue to take on the majority of the market? And that's really what caused the crash. It's interesting, in Metro Denver specifically, home prices are rising at an annual rate of 12%. Up from 2014, they were rising about 9%. And that's really being caused in Colorado by jobs. We're running twice as high as the national average in jobs. And Colorado ranked fourth among all states with a percent gain in population. We added about 83,780 people last year. I guess we're all seeing more of that of traffic on the roads. And so it really gets all down to jobs. Jobs create opportunity. Jobs help people buy homes and to create that opportunity for themselves.
Right. One of the things that we were talking about last time, I saw an Investor Business Daily article, and it talked about the mortgage crisis deja vu. So that's why I'm just wondering if you think that this may happen again. So it said that 6 regulatory agencies led by the Consumer Financial Protection Bureau officially watered down standards for home loans packaged and sold to investors in Fannie Mae and Freddie Mac as securities. Mortgages with no down payment, weak credit, high debt-to-income ratios will face no legal liability. It says, but now these MBS with subprime standards won't be labeled subprime anymore like they were previous to 2008. Now they're going to cover the government seal of approval and be called qualified residential mortgages so that people will not realize these are actually the same things. Had you heard about that?
Yeah, it's the same, content with a different label and package on it. And so, that is a concern. There's a great blog that my friend Tio Nicholas did. He's a local individual, and it's called How to Use Real Estate Trends to Predict the Next Housing Bubble. And I think he did a phenomenal job on it, and I recommend it to everybody. It's a pretty short read. But he talks about the 4 phases of an economy. There's a first phase, which is the recovery, which everybody would say we're definitely in Colorado. You have declining vacancies. You had no new construction. I would say now we're in phase 2, which is the expansion phase, where you have declining vacancies and new construction because we're seeing new construction out there. And then eventually it will get to what's called hypersupply. And that's where you have, all of a sudden, you start seeing increasing vacancy rates of home supplies or apartments, and the new construction is continuing to come on. And what happens is it continues to overbuild, and then you go down into a recession. What's interesting, though, about this article is that it's predicted that the next peak will not occur until 2024. Now, I don't know if that's true or not, but the individuals he uses to reference this article predicted the 2008 crash almost to the exact year. So it's quite an interesting read, and I would encourage all of your listeners to look at that blog.
Great. Awesome. I actually just went ahead and stuck the book right up on our website so everybody
can
see that at our Facebook page, actually, for the Americhicks. So thanks for that. That's a great one. Do you have any advice for people to make investments if they see that trend is about to happen, if it is about to happen again? Any good advice from you?
Absolutely. Well, I'm a believer you can make a good or a bad investment in a hot or a down economy. And if you look at real estate, it's one of the best investment vehicles for people. Not only are there wonderful tax advantages to it, but you also own something that's real and tangible versus a stock that can, disappear over a few months' time. And so right now, Denver is hands down one of the top investment markets in the city. On the commercial side, Denver has moved from a third-tier city to a second to a top-tier city. And we have about 50,000 plus people moving here a year, and there's going to be continual demand for the next several years, in my opinion, with regards to rentals and different houses. So whether someone's buying a home and doing a fix and flip, whether they're buying something and renting it out, I think real estate is a great value for somebody, not only to build their wealth, but also to have some tax advantages with it. At the same time, be smart about what you're buying. I really believe you make your money on the buy in real estate. Real estate by nature is an inflexible animal. I can't pick it up and move it down the street. It's kind of stuck in the one spot that it is, unless it's a mobile home or something that I can move. And so make sure that your basis in that property is at least at, but preferably below market, and really go out to create that value.
And how would one find that out, Brian, if they're not an expert?
Absolutely. Well, there's some wonderful, trends out there. Well, first of all, there's, real estate brokers themselves, but there's a company called Realty Track, and there's other online sources that will tell you what the average prices are, in a specific market or location. As an example, right now, if you go to the Realtors, the Colorado Association of Realtors posts online, and they just released their March 2015 report that I just got a little bit ago, but the average sale price has gone up from $306,000. This is statewide, $306,414 to $343,620 in Colorado. That's a 12.1% increase. Houses are staying on the market less time. They went from 81 days down to 73 days. But here's an interesting one. They're receiving about almost 99% of the listed price they're receiving in the actual sales price. So it's pretty close to what people are asking. So the market is being very efficient. But again, do your homework and make sure that you get a mortgage that you can afford, and that will help to be offset by any rental income that you hope to receive from the property.
Brian, it's Kim here. What about young people that are just starting out? It seems like they're getting priced out of the market. What would you recommend to them?
Well, they really are. And what's really going to be fascinating with younger people, in our generation, one of the goals of the American dream was to go out and buy a home and to hopefully pay off that home in one's lifetime. My parents, that's what they wanted to do, was to pay off their home. In my generation, it's more of buy a house and then fix it and then go to the next house as we have kids, et cetera, and maybe end up in a house down the road that we might pay off. But that wasn't necessarily the final goal. Today, with younger people, it's going to be very fascinating to see if they're going to want to buy homes and to pay them off over the long term, because they saw the devastation that their parents went through the 2008 crash. A lot of these people, given their lifestyles and not wanting a lot of hassle and having flexibility, are choosing to rent. And that's why you see the vacancy rate now with the apartments just at historical lows. Right now in Colorado, or in Denver, I should say specifically, the vacancy rate is under 5%, it's about 4%, a little over 4% right now. And the average apartment rent is $1,168. So it's not cheap, and it's very hard to find them. So for young people, I would recommend that if they, plan to stay in an area with a job, there's nothing like creating additional value and wealth for them by buying their place instead of just paying rent out the door. But again, make sure that they're in a position in their life that makes sense for them.
When we come back, do you have an opinion? I guess we have just about 3 minutes. This construction defects law that has been in Colorado, do you have any comments on that?
I do. Do you want me to give it to you now or when we come back?
Yeah, let's go ahead and start with it, Brian.
Okay. So sadly, because of the defect litigation law, a lot of people are not willing to build condos, which is a shame because it just leaves them open to so much liability by the subsequent owners, whether it be a fair foundation. And as you know, in Colorado, we tend to have hot soils. And even if someone is trying to build something in the right way, they can come back and be sued for that. So a lot of them don't want to have the hassle of it, so they're focusing on building apartments and other products. And so there's a real short supply. And condos are a great entry point for a lot of younger people or people, that aren't at the, level to necessarily go out and spend more for a home. And so it's really sad. And I think that there definitely needs to be a loosening of that law to allow people to be able to build and to build it in a right manner.
You bring up an excellent point. And as you know, I'm on city council for my little community. And we actually passed an ordinance to address this construction defects law, which I was actually really pleased to bring the motion forward. And we actually are starting to see some interest regarding condos. And the reason that I felt it was so important was just what you said, Brian, is that we need to have vehicles for our young people to start to get into the real estate market where they can start to, instead of throwing money away on rent, can actually start to create some equity for themselves.
They absolutely have to. And what's interesting about that is the average sale price of a condo and townhouse in Colorado is about $300,000 right now compared to the average sale price of a house, about $343,000.
Wow.
But they would be a whole lot less if brave individuals like yourself, and thank you for doing that in your community, were to step up and to create some sanity as it relates to some of these laws, because these builders want to build it, but they just can't leave themselves open for a liability on that level.
Welcome back to Heart of the Matter. I'm Kim Munson here with my good friend Molly Vogt. Woody's pulling out all of the rain songs because we have a beautiful rain going on here in Denver, Colorado this afternoon. It's just gorgeous. Life-giving rain is what it is. But we are so honored to have our good friend Brian Watson on the line with us. He is the founder and CEO of North Star Commercial Partners, which is a commercial real estate investment company. And Brian, I wanted to kind of go back to some basics. You were a kid that grew up on the Western Slope. How do you get from there to this successful real estate entrepreneur? I think people would really like to hear that.
Well, thank you. That's very kind of you. Yes, I did grow up in Olathe, Colorado, over on the Western Slope, and my father was involved in construction, mainly residential real estate, and so I got to learn real estate literally from the ground up. And I'm very thankful for those roots on the Western Slope, and went to school in Boulder at CU and got a degree in real estate, and then founded North Star Commercial Partners after being a broker for 7 years.
I guess you had been in the investment or in the real estate business for 7 years, really got to know that as being a broker. And then what, you decided that you'd start to invest in properties on your own or with partners, or what happened exactly?
Yes, well, I came from a family of entrepreneurs, and that's what we discussed around the dinner table at night. My parents had their own companies, and it wasn't, they've always said, what company you're going to go out and create. And so real estate, I always gravitated to that. I love finding the diamond in the rough and, developing it and creating jobs and opportunity for people. So we decided to start connecting our passions with our profession, and our passions are creating jobs and opportunity and empowering people. So at North Star, we focus on buying vacant buildings, and we go in and improve those buildings and then have companies locate in them. We do it a lot through Colorado and then around the country as well. And again, mainly I focus on the commercial side, but have done a lot of residential investments also.
Brian, you've been very, very successful, and we have seen a bit of a movement in America with kind of some envy politics out there. But I think that it's important to just note that in your hard work, I imagine that you probably put in more than 40 hours a week as you were building your company. That what you have done in your investing in your hard work is you have created jobs, which has created opportunity for people to go out and have the dignity of working for a living and also improving their lives. And that seems to be something that you have a real heart for.
Well, I appreciate you saying that. Being an entrepreneur is not easy. I mean, my wife and I, when we started our company, we'd saved up a little bit of money, and we put it all on the line and risked everything that we had. And to this day, all of our employees get paid before we do, and we work, more than 12 hours a day. My wife and I work together, and as entrepreneurs, whether it be nights, mornings, weekends, we are working. We love what we do, but it's not easy. And I think that we need to celebrate individuals who are trying to create opportunity for people and to support them. It is the American dream. And whether you work for somebody or you decide to go out and create your own venture, the idea of America is that we should celebrate success as you define it, not to penalize it. And sadly, there are those who believe that, people just went ahead and found this or took advantage of somebody else to get it. And it really breaks my heart because that is not what the founding of this country was based upon.
Very true, very true. Couldn't have said it better. It's interesting because you just mentioned that you and your wife work together, and I've got this picture of you and your wife on horses kissing in the Villager newspaper. Says that y'all were the sweetheart couple of the year. How cool.
Well, you didn't see that we were looking down at our cell phones trying to answer some emails back at the office while we were kissing, but no, we were, and that was very kind. But, I just feel blessed to be able to work with my wife, and it's not easy, and I can tell you during the down economy, was, again, the worst real estate market since the Great Depression. We went down, sadly, to 2 employees, and my wife and I, we worked just ungodly hours trying to keep it all together and to, do what we could to build the company. And now we've built it better and stronger than ever before. At North Star, we're back up over 15 core employees, and then my other companies, we have about 100 employees, and we just try to do what we can. But it's an interesting time, but high tides raise all boats. At the same time, when the tide goes out, entrepreneurs, they do what they got to do to be able to survive, and that's what we were fortunate to be able to do as well.
So, Brian, what would you say to a young kid getting out of college right now with a hope and a dream? What would you say to them? What would your advice be to them?
Well, I believe in the American dream. I believe it's alive and it's well. Is it under attack? Yes. But find out what you love doing. And if you go out and pursue what you truly love, you'll never work another day in your life. Now, we all have to go out and learn from others and have mentors and maybe take that first job that is not our ideal job. But always focus on what is your long-term goal. And each step you take every day, try to figure out how you're going to get there. And to really begin to define success for yourself. What does that look like for you? It's not oftentimes monetary success. Most people say that a lot of individuals derive their happiness are they fulfilled by their job. So focus on what is it that you love doing, and then go out and try to create a career around that.
And I think that another important component is to always do your best at whatever job that it is. Martin Luther King Jr. had done an excellent speech talking about if you're a street sweeper, be the very best street sweeper that you can be. And when you go out and do your best, like you say, it may not be, your first job may not be exactly what you want. But if you go out and do a job well, with a smile on your face and continue to work hard, the opportunities just open up.
They really do, and I think it's about a lot of its attitude. When I first went to school in Boulder, Colorado, the first job that I had was shoveling horse stalls at a barn in the north part of Boulder, and I absolutely loved it. I mean, that's what I came from in the western slope, so I understood how to shovel a stall. But even to this day, I'm not above shoveling a horse stall. And, I look at each job that you have as something that you're adding value to and creating, and you have a good attitude about it. Again, not every job is ideal, but if you really go about it with a positive attitude, I think the day will be shorter and you're going to have a more fulfilled life.
And work is very important. Being industrious, doing something with your time is really important. My first job, I started working at the age of 14, although babysitting before, was Daylight Donut and Chicken Inn. And it was really great. And Molly and I actually had done something on minimum wage. We're going to be talking about minimum wage next week. Is sometimes those first jobs, I'm not sure I brought that much to the table. I probably should have paid them instead of them paying me. But it helped me understand, the meaning of doing a job well, of hard work, showing up on time, all those important things that our kids need to learn in order to be a success in life.
Yeah.
I think there's something to be said for having pride in having a job. Sadly, there are some individuals out there, specifically in the federal government, that are all about class warfare and this idea that somehow the haves are against the have-nots and that, depending on what one makes, et cetera, people are being taken advantage of. You know what? When I was stacking groceries at City Market in Montrose or I was shoveling stalls, I had a job and I was proud to be able to start working, to start building my skills, and that one day I could go out and earn whatever it is that I wanted to earn. But it's not something that can be taken for granted and just assume that because you show up, you can start being paid X or Y. Go out, find the best job you can, improve yourself every day, and hopefully there's growth in that job. And if not, go find another job that will reward your skill set. And I just really do believe there's something for that pride in working hard and creating something for your life.
Totally right on. We make money by adding value to other people's lives. And
exactly.
If you've already figured out what that value is right out of college, obviously it's going to take you a little while. It's going to take you a little time to figure it out. But go get that first job, just like you said. Be the best you can at it. And then eventually you will be good enough that you are offering so much value that people are going to be throwing money at you for whatever it is that you've got to offer that they need. Molly Vogt and Kim Munson here, starting Hour 2. Just to catch you up in case you're just catching in with us, we are talking to a real estate investment expert, Brian Watson, who is the CEO and founder of North Star Commercial Partners, which is a privately held commercial real estate investment company that was founded in 2000 right here in Colorado. We had talked a couple weeks ago to Cornelia Mrose, who was talking about how the government initially had required lenders to reduce their standards when they were lending money to homeowners and home buyers. And that led to the crisis of 2008, the financial crisis and housing bubble that burst, and said that it looks like that may be happening again. We know that the Federal Housing Finance Agency Director, Mel Watt, recently told mortgage bankers that once again, Fannie and Freddie are going to resume their risky pre-crisis practice of buying mortgages with as little as 3% down and less than perfect credit. So, that those Fed-controlled mortgage giants are the ones that set the standards by which loans are made. So if they are going to once again start offering loans to people that can't afford to pay them back at rates that aren't sustainable, we could be going down this track again. So we've got Brian on the phone. Brian, are you with us?
I am.
Great. So before we went to break, we got an email from a friend of mine who is a real estate agent in Florida, in Tampa, Florida, and she was curious to see if you had any thoughts on what's going on down there. She said, the market in Tampa right now has been supported by cash. Cash is king. And so a lot of homeowners that are selling their homes are are reducing their prices because they're more interested in getting paid 100% of the value of their home in cash rather than, a loan from a bank, right? So they want all the money up front. So they're reducing the price of the home to sell it. And then when they do that, of course, now all the other homes in the neighborhood's value is going down. So now other people in that neighborhood that would want to sell aren't selling because they can't get the same price they normally would have. They're not actually getting the right market value. So they're staying in their homes and they're kind of creating an artificial market. I don't know if you'd heard about that happening in other areas or if you had any comments on that.
Well, Florida was one of the worst hit markets in the entire country, specifically from the residential basis. The estimates were that 1 in 4 homes went into foreclosure during the down economy. However, areas like Miami and others have come back with a vengeance. There's a tremendous amount of cash, and you're saying all cash, that's specifically coming in from South America and from Russia. And these people are paying all cash for these, different units. And in areas like Miami, it has come back and exceeded by far from the crash that occurred. In other areas through Florida, yes, I think that there is some of this artificial market coming along. But I will say overall that the prospects for Florida look quite strong for the coming years. You think about the mass amount of people who are the snowbirds, who their dream is to go down to Florida and own a little piece of sunshine as they get older. And as those baby boomers come through, I can tell you there's going to be a tremendous demand for specifically the southern markets, but also even in the West.
What challenges do you foresee in the real estate market for just regular people looking forward?
Well, I think like anything, there's a lot of competition. And so right now, real estate has come back and, you remember all the fix and flips and all of that was going on. There's just a lot of capital in the marketplace looking for a home right now. So it's ultra competitive to be able to try to find the right place to buy, whether you want to live or it's for an investment for yourself. So you have to be ready because these houses are going very quickly. Same thing with apartments. My friends that are coming to Denver, they say that if you tour a place in the morning, you better be making an offer that day because most likely it won't be available the next day. And so, like anything, just be prepared, be ready, do your homework, get good counsel, whether it be from legal counsel or a real estate broker, to make sure that you're ready to strike. And when you are, then go ahead and make the best deal for you. Just make sure that you can pay for it, even if the economy changes a little bit.
Brian, what do you see regarding new housing development, I guess here in Colorado or possibly nationwide? Are we building houses that kids can start to invest in or what do you see on that?
There's a lot of new homes being built. Just in Denver last year, there were 6,516 new single-family homes were built and about 7,600 apartments. But there's definitely, if the free market is truly allowed to operate, again, that's part of the reason what got us into this problem, is the lenders have it dialed in of where and who they should be able to make loans to. And they want to get as much money as they can out the door because that's how they make money. But when you have the government come in and force them to make loans to people that they're probably not going to get paid back from, that's what causes the problem. Same thing with building. If you allow builders to go out and to build reasonably, then they will continue to keep that supply available. Sadly, they may build too much, but even when they build too much, that creates opportunities for the patient investor to be ready and to take advantage of that. So again, there's always inefficiencies in the market. Just go out and do your homework and be able to execute on that when it makes the most sense for you.
What's a good way to get information if foreclosures are coming down, if there's going to be some foreclosures in the area? Would you say just have a realtor always be on the lookout for you in specific areas, or is there like a website or some public place people can go for that? Because I just think, actually Kim and I were in Montana recently and somebody was pointing to a house that was just beautiful, $1 million plus home, and the divorce was really, really ugly, and so it sold quick for like $400,000, and I was like, man, I would love to have had the insight on that, right? How does a normal person like me find out if a family's going to have a problem and that house is going to go cheap?
Well, I agree with you. Having a realtor who's always looking for you is a good thing. I mean, that's what they do for a living. And yes, there's, websites and different things available, but there's nothing like local market knowledge. Even on all the millions of square feet of the different office buildings and warehouse and buildings that I own around the country, I always engage a local market broker who's marketing those for me. So I think a realtor is a great way to go. There's also different title companies will produce reports about foreclosures. A lot of those things will be posted in things like the newspaper and other things. I would also recommend going to banks that you have a good relationship with, and they keep a listing of what are called REO properties, which is real estate-owned properties, and they'd be happy to share those with you. And then again, there's a bunch of online sites as well. The problem with a lot of that for the foreclosures, again, is that, if they go to auction, or I just bought 6 assets at an auction in Atlanta, and, you had to be able to put down 10% the day you were picked and be able to close in 30 days. And so, like anything, those deals are available, but get, whether it be a lending relationship or your own capital together so that when they do come available, you can act very quickly.
Great. Hey, Brian, this time has gone way too quickly. We only have about a minute left. So what is a last thought you'd like to leave with people? And is there any website or any way, you want people to get a hold of you? I know this Opportunity Coalition is a really cool deal that you're doing.
Yeah, well, anybody can learn about what we're doing on my website, which is brianwatson.us. And it talks about the Opportunity Coalition as well as our education fund, et cetera. I will tell you that Colorado is in a very special place right now. I think the economy is going to continue to improve, so it's a great time to be making investments. And if anyone wants to look around the country, there are other markets that are trailing Colorado, but will also be improving over time as well. And so if we can be a resource, feel free to reach out. And I just want to thank you for your show and all the great interviews and information you put forth.
Well, Brian Watson, you are truly a leader, an entrepreneur. You're an inspiration. Thank you for the people that you employ and the vision that you have, to both you and your wife, and your hard work. And we really appreciate you sharing your time with us this Sunday afternoon. So we wish you a great week.
I was honored to. Thank you so much.